Hello dear viewer, my name is Daniel Kijo and I would like to welcome you to a special public awareness program on financial leasing. In the recent years, the Parliament of United Republic of Tanzania enacted the Financial Leasing Act in 2008. Consequently, the Bank of Tanzania issued the Financial Leasing Regulations in 2011. And for you at home who don't understand the simple definition of what financial leasing is, this is a finance facility that enables entrepreneurs or any organization to possess, to use, and possibly own a productive asset through a very convenient finance agreement. Such equipment that can be acquired through these agreements are cargo truck, industrial equipment, tractors, buses, airplanes, mining equipment, printing machines, and the like. So I'm no finance expert. That's why we're having this show here today, so that me and you at home can understand this better. And to help us do this, I have a team of finance experts who are with me here today. Now, to introduce our panel, to my right, I have Mr. Shefu, who is a consultant at Ernst & Young. How are you, sir?
Very well.
Are you ready to discuss financial leasing?
Yes.
Great. To my left again, I have Dr. Mzava, who's a senior lecturer at the Institute of Finance Management. Welcome, doctor.
Thank you.
Everything's okay?
Everything is fine.
Great. Again, I continue to introduce my panel of finance experts. And to my left, I have Professor Jairo, who is a professor of finance at the Institute of Finance Management. Prof, how are you, sir?
I'm fine, Daniel.
Are you ready for the task at hand?
I'm ready.
Perfect. I'm continuing. To his left, I have Dr. Mohammed, who's a senior lecturer of finance at the Institute of Finance Management. How are you, doctor?
Fine.
Everything's okay?
Yes, yes, sir.
And last but not least, let me introduce Dr. Josephat Lotto, who is a lecturer of finance at the Institute of Finance Management. Doctor, welcome to the show.
Thank you, John.
Are you ready?
Yes.
So, gentlemen, we have a task of creating public awareness on an issue that is new in Tanzania but will really help businesses. But before we do that, let's go on a break, and when we come back, we'll get into the issue at hand.
Do you feel financially stretched and hence you cannot buy the crucial machine or equipment for your business? Are you facing a dilemma of whether you should take a loan to acquire an important resource such as machine for your factory? Why not turn to financial leasing? Yes! Championed by the Bank of Tanzania and governed by the Financial Leasing Act of 2008. Financial leasing will enable you to acquire the asset or machine you want without leaving a collateral. Financial leasing gives you fewer maintenance headaches. Leasing comes with a number of tax benefits. Leasing will protect you against inflation. Free up capital because you don't have to pay down payment. It provides flexible payments using the revenues from the same machine or equipment. Leasing will give you budget flexibility while reduce total cost of ownership and many more benefits. For more information, visit your bank or any financial institution near you.
Welcome back, dear viewer, to this special public awareness program on financial leasing. Before the break, we were introducing what financial leasing is, but we want to understand, Dr. Mzava. Tell us in simple language, what is financial leasing?
Thank you, Danny. Financial leasing is a form of financing, essentially for long-term assets, which involve commercial arrangements under which the owner of the assets grant the right to possess, the right to use, and possibly to own an asset to another party for a specific period with an exchange of series of periodic payments.
Okay. So how does it work in practice, the agreement? For instance, I'm a building contractor and I want to get a bigger machine for a big tender I'm trying to get.
Yeah, maybe to start with, we need to understand that leasing is a commercial arrangement, is a contract which involves, in standard terms, two parts. The lessor, who is the owner of the asset, and the lessee, who is the user of the asset. And as in other contracts, it specifies the asset that is involved in the lease arrangement. We can say the specification of the asset under considerations. Now, how it works is a very simple, but it is a process. Initially, the lessee, potential lessee, the user of the asset, will identify the asset from the manufacturer or from the supplier. If it is a truck, then a truck that the lessee actually want to use in the business. Then we'll negotiate the purchase prices or the terms, and you will get the quotation. After that, lessee or potential lessee will take the quotations to a potential lessor for the asset, specifying the asset specifically and the prices. What will be required after that is probably for lessee to fill in some kind of form to the lessor, including all the attachments, the invoices, etc. Lessor will then assess the capability of the lessee actually to pay as per standard lease terms. Once lessor and lessee are all happy on the possibility of paying, they can enter into a written contract, a written agreement. This is what we call now a lease agreement. Once the lease contract is signed by both parts, then lessor will actually purchase the asset, will retain the title to the asset, and will supply asset to the user who is lessee.
So that is a financial leasing agreement.
That is financial leasing agreement, and that is how it works.
Great. Now, anything that involves agreement or contract, I think of the law. And I know that recently in 2008, the Parliament enacted the Financial Leasing Act. Now, Professor Jairo, tell us the objective of the Financial Leasing Act of 2008 and how does it apply?
The Tanzanian Parliament enacted the Financial Leasing Act of 2008. And then after that, the financial leasing regulations were then issued by the Bank of Tanzania following the government notice number 151 on 29th April 2011.
Okay.
Now the objective of the Act is mainly to stimulate capital investment in the country as well as to widen the access to business finance beyond the traditional method that we know, like the bank loans. And in doing so, the government expects to promote entrepreneurship and investment in the country. And because of the importance of financial leasing, all the stakeholders, like the government, the development partners, and all the players, like the banks and financial institutions, are in support of the leasing arrangements, and that's why even the law has been enacted, because it's aimed at propelling the economic development of the country. The enactment of this law has opened another door to investment opportunity in the country.
Thank you, Professor, for that great answer. And that is why the Bank of Tanzania has powered this very special public awareness program that you're watching now on financial leasing. Now, coming back to you, Dr. Mzava, who can lease? Who can benefit from this financial lease agreement?
Literally, anybody can lease. As we saw, what is very, very important is that there is a commercial arrangement between two parts, the lessor and lessee. So if you are self-employed, if you are a church, if you are a company, whether it's a big or small, if it's a local government authority, a ministry, any organization, NGO, you can lease.
Thank you very much, Doctor. Coming to you, Mr. Shefu, I wanted to know, it sounds a lot like a convenient bank loan to me. How does this differ to a convenient bank loan? And we know that a lot of Tanzanians have great ideas but lack initial capital to get into business and run their dreams. How does it differ from a bank loan?
Thank you, Danny. Financial leasing, actually, it's a convenient finance facility that enables entrepreneurs who probably never thought before that they can actually own an asset, a productive asset, to actually being able to own in a more convenient manner. It has some similarities to a conventional loan in the sense that they are all financial facilities. But similarly, they also have conditions, terms and conditions which must be met. And if these are not met, there will be certainly consequences for not meeting these conditions. The advantage or benefits of the financial leasing comes from the convenient aspect compared to other sources of finance to acquire a business equipment. The ease with which an entrepreneur will be able to secure the productive equipment, for example, tractors or milling machines or printing machines or trucks for transportation of cargo, or also for the fleets of buses. In a sense that an entrepreneur would not be required to have a collateral in a form of landed property, for example, which probably would be the most condition that is required for a conventional bank loan. So that particular hassles, as we know, actually many entrepreneurs actually do not have landed properties to put as a collateral. So financial leasing actually do away with that particular requirements, and which is a very important advantage of financial leasing. Secondly, it enables an entrepreneur to actually own the asset at the end of the lease terms, if he opts actually to own the asset. But financial leasing also can have a flexibility that the entrepreneur may not necessarily need to own the equipment at the end of the lease periods. Thirdly, convenient of payments. So you possess the equipment upfront from day one, you use it for your business, so you produce income from the use of that equipment, and you use the same income to repay to pay for the lease rentals, spread over a period of time, which is very convenient for your businesses. So you make money, pay as you use the equipment, and ultimately, if you so opt, you own that equipment, it becomes yours.
Thank you, Mr. Chef. So basically, a person can either, through this service, start up their business or possibly upscale their business if they need to upgrade, yeah?
Absolutely. The financial leasing facility can actually be secured for different objectives. One could be even a startup at the beginning of your business. Secondly, could be actually business expansion. So you want to expand your business. You want to have more trucks so that you can serve more geographical locations. So you want to buy additional trucks. Or similarly, it could be that you want to improve the quality of your existing product. For example, you want to buy a brand new or more modern printing facility compared to the old one that you have.
There you have it, dear viewer. This is what financial leasing can do for your business at home. And that is why the Bank of Tanzania powers this show today to help you understand this better. But before we continue, Professor Jairo, all things are regulated. And I hear that in 2011, the financial leasing regulations were passed. Tell me a bit about these regulations. Whom do they apply to? How do they work? And basically an understanding of this piece of legislation.
The Bank of Tanzania wants to ensure that there is a safe place and conducive environment within which the financial leasing can operate. Now, the regulations aim to achieve four major issues. Okay. The first one is to ensure sustainability of the financial leasing operations, to make sure that the operations are sustainable. Secondly, is to instill the corporate governance and accountability by the companies, the shareholders, the directors, the managers, as well as all the stakeholders. And also to make sure that they put in place the safeguards against the practices such as money laundering and other corrupt activities in order to promote and protect the integrity of the financial sector. Lastly is to foster the efficient flow of information and transparency. And the regulations give the government and the stakeholders assurance that the operations of the financial leasing in Tanzania follow the prudential guidelines of the Bank of Tanzania and also the rules and the regulations that apply.
Okay. The industry, the financial leasing industry in Tanzania is relatively new. So the move by the government to actually enact the Act, Financial Leasing Act 2008, and the regulations by the Bank of Tanzania actually aimed to stimulate and probably also encourage more businesses in Tanzania to actually provide these services and hence actually stimulate the economy. So with the enactment of the acts, we expect to see more investors coming into the country and also our own domestic investors to actually invest in financial leasing services.
Now we know there's legislation that support financial leasing. Now coming to you, Dr. Lotto, how long in the agreement, how long can a leasing period be?
Financial leasing is a long-term source of finance. The length depends on the type of an equipment or an asset. For instance, computers may take 3 years, and trucks, like the bigger trucks, may take 5 to 7 years. But in general, this period should not exceed the useful economic life of that particular asset.
Because the period exists only as long as the asset exists.
Sure.
Thank you very much, Dr. Lotto, for giving us a time period that financial leasing agreement can go. But for now, we'll take a short break for a brief period, and when we return, we'll continue discussing financial leasing.
Do you feel financially stretched and hence you cannot buy the crucial machine or equipment for your business? Are you facing a dilemma of whether you should take a loan to acquire an important resource such as machine for your factory? Why not turn to financial leasing? Yes! Championed by the Bank of Tanzania and governed by the Financial Leasing Act of 2008. Financial leasing will enable you to acquire the asset or machine you want without leaving a collateral. Financial leasing gives you fewer maintenance headaches. Leasing comes with a number of tax benefits. Leasing will protect you against inflation. Free up capital because you don't have to pay down payment. It provides flexible payments using the revenues from the same machine or equipment. Leasing will give you budget flexibility while reduce total cost of ownership and many more benefits. For more information, visit your bank or any financial institution near you.
Welcome back, dear viewer, to a public awareness program on financial leasing. Before the break, we were discussing on the period of time that can lapse during a financial agreement contract. Now, coming to you, Professor Jairo, do you need to put down a down payment in these type of agreements? Because most loans are that way. What about financial leasing?
Thank you, Daniel. Actually, it depends on the terms of the lease agreement. Some lessors may require a down payment, others may not. But in addition, even the lessee may choose to pay a down payment because that may reduce the length of time when the lease rentals will be paid. Okay. And therefore it is important for the lessee to consider this when they are making agreement with the lessor.
Okay. On the same topic of payments, please tell me, what are the payment frequencies?
The frequencies of the payments, again, they depend on the agreement. They can be made weekly or monthly or semi-annual or even yearly, depending on the length of the lease or depending on the agreement between the lessor and the lessee.
Now, dear viewer, we both know that, and you, sirs here with the panel, that most agreements or loan contracts need a sort of collateral. You know, you don't get these things without collateral. Now, in this case, for this product of financial leasing, Dr. Mzava, how does that work? Do you need to have collateral to get an agreement?
Yeah, the straight answer is no. If you follow how the lease arrangement works, once the agreement has been signed between the lessor and the lessee, and the asset is purchased by lessor and supplied to lessee, actually lessor retains the title. So the asset itself actually serves as a collateral. So you don't need any other asset apart from the asset being involved in the lease arrangement.
All right. Thank you, Doctor. Coming back to you, Prof, this issue is interesting. We talked about payments with you. Now, I'm asking you, again, let's say business has started and I want to change the payment frequencies after signing. Earlier you talked about payments. Can I change them during the course of the agreement?
Thank you, Daniel. Normally, after an agreement has been entered into, the terms of the lease must be adhered to. However, there are a number of things to consider. One is that if you want to change the frequency of the payment, then you should know that the longer the intervals, the higher the interest charge. So even if the agreement has already been entered into, under some circumstances, it is possible to renegotiate with the lessor a change of the payment of frequency, but there will be a fee that will be payable because of the renegotiation. And before the new arrangement comes into force, these things will have to be discussed between the lessor and the lessee and agreed upon before they take effect.
All right. Now I want to consult my consultant. Mr. Shefu, let me ask you, are the payments fixed for the period of the agreement?
Thank you, Danny. Depending on the contracts that a lessor has actually entered with the lessee, in most cases the payments will be fixed actually, so that you know if it's the monthly payments, you know exactly how much is paid monthly over a period of the lease periods. If in case of any financial difficulties or any change in circumstances, normally the lessee will go back to the lessor. The lessee will go back to the lessor and try to renegotiate any such sums if that is necessary to actually change the amounts and probably the frequency.
Okay, I'm still consulting with you, so please help me understand again obligations of each party to a financial lease agreement. What are the obligations?
Thank you, Danny. Again, financial leasing is an agreement, it's a contract, just like any other contract. So each party to that agreement has obligations stipulated in the agreement. So to start with, I would say the process, the leasing process itself actually has got three parties as a process. So you have the lessor, who can often be a bank or a specialist leasing company who provide the finance. And also the second party is the lessee. I think it's also been mentioned before. And this is an entrepreneur who would actually receive the equipments for use in his business. And the third party also involved in the process is a supply of the equipment. So you could see these three parties all have obligations. So the first contract is signed between the lessor, who is a bank, for example, or leasing company, and the supplier of the equipments. These will be normal purchase of an equipment agreements. So that has got terms and conditions. For example, the asset has to be supplied, that has to be supplied must be in a good conditions, working conditions, as per the specifications. So that's the first condition that the supplier must meet. If he doesn't actually meet those obligations, he owes the lessor a duty to make good the defaults that may actually happen with regards to the specifications of the equipment. Secondly, the agreement that is signed between the lessor and the lessee. The lessee, actually, one of the conditions is the lessee who would possess the equipment and use in his business should be able to use that equipment with peace of mind, without any interference by the lessor. So those are the obligations that must be actually, the lessor must confirm and guarantee the lessee that he can use the assets without any interferences. Thirdly, if there are any agreements that have entered between the lessor and the lessee, for example, if the lessor is the one who will be responsible for payment of or to arrange the insurance and maintenance, then these actually have to be met. On the lessee part, who now you possess an equipment which is not yours to start with, you have obligations. Firstly, you need to take a good care of it. So you must have a secured place to actually keep those particular equipments. You have obligations to make sure that you actually use that particular equipment for the purpose in which it's actually been met. Because if you use it for other purposes, you'll actually may invalidate the warranties, and hence that you're actually against the terms and conditions.
If I may chip in, please do. When you asked about the payments being fixed, yes, it is true they are fixed, as my colleague said. But it is important to know that normally the VAT, which is payable on the rentals, will be paid according to the applicable rate at the time of payment, if it is a monthly or any period. So the VAT that will be levied will be that which applies on the date of payment.
Okay.
And in addition, some lessors may also put a clause in the agreement that allows them to adjust the VAT rates or the interest rates to make sure that they are in the same financial position. They are not worse off because of the changes in the interest rate. So they adjust the rates to make sure that they maintain their financial welfare for the remaining number of rentals or the remaining period of the lease after the changes in the interest rate.
Thank you very much for that tax element.
Yeah. So the other most important obligation certainly is the payment of the lease rentals on the due date. Yeah, that's very important. If that is not met, then actually...
And everything falls out of place.
Yeah, possibly, unless you negotiate.
Now, you brought up an interesting issue, Mr. Shefu, that the most important obligation is to make the payments. Now, Dr. Lotto, what if I can't make those payments?
Financial leasing is an agreement like any other commercial agreements. In any business agreement which involve payments, you are required to make payments. If you fail making payment for any reason, you have an option to contact the lessor. As a lessee, you contact the lessor, you can negotiate the rescheduling of the payment. You'll be given another chance will be given some more time to respond to the payments, and that period is normally a little bit longer enough for you to rearrange yourself, and then we possibly believe that at the end of that period you'll make the payments, because that period of time is always enough and sufficient. Unfortunately, if you cannot make that payment within the rescheduled period, then the lessor may repossess the asset back to him, and then you will be liable to pay the remaining lease payments, which were supposed to be paid if the contract would be existing up there.
So he keeps the car, and irrespective of that, I still am obligated to make the remaining payment.
Yeah.
Another thing that is very important is to understand that for both parties, lessor and lessee, this is the business. Lessor, remember, is the one who actually purchased the asset. So the payments are required to recover the purchase price, but also to generate some profit margins. So in a situation that cannot be paid, the contract will have to specify a way in which lessor will make sure that not suffer a loss. It's like the contract should be a win-win between lessee and lessor.
All right. Now, since I'm understanding this issue a bit deeper now, I'm coming back to you, Dr. Lotto. Can I change my mind after signing this lease agreement, after knowing all this? Can I change my mind and get out of the agreement?
There's always a way to accommodate change in mind. You can immediately contact the lessor and inform him of the decision, of change in decision. But it should be before you receive the equipment from the supplier. And you also ask me if I can end as a lessee the contract before the contract period elapses. There is also a room for you to negotiate with the lessor, so that the arrangement can be made to accommodate ending the contract, although there should be some charges which are like the legal fees for ending up the contract, and all other administrative expenses which will be incurred during the process of closing down the contract.
All right. Thank you, Dr. Lotto.
I think the contract normally would stipulate very clearly what will happen if a party to the contract decides to shorten the contract to get out of the contract earlier than before. But these instances are very infrequent. And as Dr. Loto said, some due diligence will be done. And therefore, normally, we don't find these instances, but they are not impossible. There's some flexibility in that.
It's good to know that. Yeah. So, Mr. Shefu, let me ask you, can I end the contract before the end of a leasing period? And what happens if I do?
Thank you, Danny. The financial leasing agreement is a contract which is certainly protected by the Financial Leasing Act 2008. There are two parties to it. If there are any instances of breach of the terms of the contract, as will be the case whereby the lessee decide to change his mind, then the agreement will have stipulated the actions that will actually take into place when there is such breach.
Thank you very much, Mr. Shefu. Now, coming to you, Dr. Mohammed, nothing is free under the sun. So tell me, what are the costs of a lease transaction?
Thank you, Daniel. The first cost will go to the lessor, the cost of acquiring the equipment. The equipment is to be acquired by the lessor, and any other administrative or legal implied cost within the process of acquiring the equipment is the first set of the costs. Second set of the cost is the regular payments that the lessee has to make to the lessor. So this will form the second set of the cost. And also, if the lessee decides to acquire the instrument or equipment at the end of the contract, then he or she will have, or that company will have to pay, and that will amount to another cost of this one. Another item will be issues of taxes, if there are any taxes to be paid, and any other administrative or early maybe termination fees, or any other, for example, equipment disposal fees. But what is important is before a lessee enters into a lease agreement, has to be very clear what is contained in the contract, because these may vary slightly from one lessor to another. And so that is very important. There are other costs that are involved in the lease business. For example, cost of insurance, cost of storage if the equipment has to be stored, any legal costs that may be implied in the contract, issues of service, and any other taxes, as I said earlier, that may be applicable.
Okay, thank you very much, Doctor. Dr. Loto, let me ask you, what checks are made when one applies for financial leasing? I'm sure there must be something they do to check them.
The first thing which should be done is to make a credit worthiness check. This is done by banks and the other financial institutions. 3 sets of information will be used to undertake this crucial activity. The first information should come directly from the application forms the lessee has submitted. And the second set of information should come from other sources which lessor derive himself. And finally, from some organizations like credit reference or credit bureaus. But in all the cases, if the lessee is assessed based on the information other than the information he has provided in the form, he will be told the source of that information.
All right, thank you very much, Doctor. Coming back to you, Dr. Mohammed, what are the tax advantages associated with financial leasing?
Tax payments for the lessee are 100% tax deductible. So this is one of the advantage. And the input VAT taxes can be offset by the output VAT.
All right, thank you very much, Doctor. Back to you, Dr. Loto. Please explain to me the importance of insurance in financial leasing, and whose duty is it to insure the equipment bought under the agreement?
Thank you, Danny. Like in any other businesses, lessee is the user of the equipment. So he is wholly responsible for ensuring the equipment. Because the importance of ensuring the equipment is so that the equipment is safe and it will be used without any stop.
Yes.
So it's a responsibility of the lessee.
So who keeps that policy, the insurance policy? Is it me who paid for it or you, the lessor? Let's say I'm the lessee.
Obviously the lessor, as I said earlier.
So I make the payment, but the lessor, if it was you, you'd keep the policy?
Yeah, because the equipment belongs to the lessor.
So what, Mr. Chef, you want to add something?
In most cases, the lessor, aiming to protect also his interest, may agree to actually administer the payment of insurance, but certainly he would shift that cost to the lessee. Yeah, so that to make it more affordable, payment-wise to the lessee, he can take upfront payment of insurance on behalf of the lessee, and certainly charge the lessee for that.
Thank you, Mr. Schaefer, for that addition. Dr. Lotto, I'm still with you. Let's assume I bought the equipment, it is stolen or it's damaged. What happens?
When that happens, you immediately report to the insurance company for arrangement to compensate for the equipment. The absence of equipment delays the production, so that should be done immediately so that the loss of production is minimized. When the asset is compensated, there will be a new policy document that should also be taken to the lessor to keep that policy document. And sometimes the insurance company might not wholly compensate for the equipment. That means you might not be compensated the full cost of the new equipment. Maybe 80%, only 80% is recovered. It's your role as a lessee to top up and then acquire the equipment and then keeps on using it as usual.
Thank you very much, Dr. Lotto, for that great answer. Dear viewer, just remember you're watching a special public awareness program on financial leasing, and the intention of this show today is to help you, dear viewer at home, to understand the issue and see how it can help grow your business, or maybe help you start a business that you've been dreaming of for a long time. We're going on a quick break. When we come back, we continue to discuss this issue.
Do you feel financially stretched and hence you cannot buy the crucial machine or equipment for your business? Are you facing a dilemma of whether you should take a loan to acquire an important resource such as machine for your factory? Why not turn to financial leasing? Yes! Championed by the Bank of Tanzania and governed by the Financial Leasing Act of 2008. Financial leasing will enable you to acquire the asset or machine you want without leaving a collateral. Financial leasing gives you fewer maintenance headaches. Leasing comes with a number of tax benefits. Leasing will protect you against inflation. Free up capital because you don't have to pay down payment. It provides flexible payments using the revenues from the same machine or equipment. Leasing will give you budget flexibility while reduce total cost of ownership and many more benefits. For more information, visit your bank or any financial institution near you.
Welcome back, dear viewer, to a special public awareness program on financial leasing. Before the break, we discussed a lot of things, legalities, obligations, a contract, and now I want to understand from you, Mr. Shefu, a bit on warranties. We know when you buy equipment, they come with warranties. How does it apply in financial leasing?
Thank you, Danny. It's important that the lessee selects an equipment from a supplier who would provide a warranty in terms of the conditions and technical specification of the equipment. Now, the principle of financial leasing is such that if the equipment becomes defective, manufacturers, for example, defective from the manufacturers, the lessee would be the one to enforce the terms of the warranty with the equipment supplier, despite the fact that the agreement is signed between the lessor and the equipment supplier, and the lessee is brought actually into that particular relationships.
Okay.
The Finance Leasing Act 2008 actually brings the supply of the equipment into the remit of financial leasing by precisely when it comes to warranties.
Just a bit earlier, Dr. Lotto told us that the lessor remained to the insurance policy. Now, what about maintenance? Because he owns a policy, does he also do maintenance? Who's responsible for it?
The lessee, who actually now possesses and uses the equipment, is responsible for maintenance of the leased equipment. In most cases, the lessee would, or the lessor may allow the lessee to actually may agree with the lessee to include the maintenance contract as part of the lease payment, such that it becomes more easier to manage maintenance of the equipment.
All right. Now we know that I've maintained it for a long time. What happens at the end of the leasing period? Do I own it now? I've been with this truck for 10 years. I want to own it. Is that possible?
Yes, one of the advantages of financial leasing is actually ability to ultimately own the equipment that you couldn't actually own earlier. So the advantage for any entrepreneur is such that you can get into a financial leasing agreement which gives you an option to ultimately own the equipment. But it's an option for you to decide. But sometimes you may actually decide that you just want to use the equipment for the useful life of the equipment, but you don't actually want to own it outright, in the end of the agreement.
So it's ideal for people who want to do project on project basis. You have a big tender, you want to just get equipment to do the tender and don't want to keep the equipment after, you can use this agreement, yeah?
Yes, perfectly. Some of the businesses would actually be only project type of businesses, so you may need the certain equipments only for the duration of the projects, after which you may not need those equipment. There may be specialized equipment. So in this case, you can actually lease equipment and use them without any need of you owning them at the end of the lease agreement. But in other cases, you may actually want to ultimately possess those equipment. So you can enter into an agreement that gives you the option of actually owning those equipment at the end of the day. Normally, you'll pay a token fee, which will probably be depreciated value of those equipments, which will be pretty token compared to the full value of those equipments.
So dear viewers, for those who have entrepreneurial spirits, you can partner, get into mining, do a project, make your money, invest in something else, make your money through financial leasing. Coming to you, Dr. Mohammed, what about office relocation under financial leasing?
Yeah, if you decide to relocate your business, that can happen, but you need to inform the lessor, and you have to get a consent from the lessor for you to relocate into another area, the nature of your business. And as I said earlier, it has to be a mutual consent between the two parties.
Adding on to another question for you, Dr. Mohammed, what happens if the lessee wants to sell his business, or maybe he wants to transfer ownership of his business? He wants to give it to someone else. What happens?
This is a much more interesting issue, because if you want to sell your business while you have leased equipment, then you will have to again agree with the lessor, because you have to understand that the lessor remains to be the legal owner of the equipment that you are using. In that case, many eventuality will come, but one of which will be, okay, you are relocating it, and in that way maybe you will have to, the lessor can arrange for another shorter lease agreement that will take care of his income or the business income in the end.
All right. We heard earlier that there are three parties to a financial leasing agreement: the lessor, the lessee, and also the supplier of equipment. Now, as a supplier of equipment, why would my customer lease? Why is it good for me?
Leasing is good for you because, as you said earlier by Mr. Shefu, that it allows you not to use a lot of initial payments just to buy the equipment. You can share or spread your cost over time. So in that way, it's very attractive. And the second one, as I said earlier, you don't need to have security for that as an asset to secure your lease payment. I think these are among the two important items why you will go for the leasing. But others were said earlier, I don't need to repeat by Chef and Dr. Mzava as well.
If I can just chip in, it depends on your customer. If your customer is actually a lessee, that will enable flexible acquisition of assets. As you recall, the initial amount required if you are leasing is relatively less. So with a certain amount of money, you can buy you can acquire 2 more assets. But also, if your customer is lesser, you are increasing sales. As more and more customers come for leasing, it means you are increasing your income, you are increasing sales.
Now, still with you, sir, some of our customers maybe, as a supplier of equipment, may say that leasing is too expensive. How do I handle this objection?
Well, the question of expensive or less expensive really needed to be worked arithmetically. But what I can say is that financial leasing provide a convenient way to acquire asset, flexible, relatively easier compared to if the same arrangement or the borrowing arrangement can be used. It takes relatively longer to get a loan or to get the loan approved than to get finance asset or asset be financed through financial lease. So what is more important is there is a contract and you need to pay according to the contract.
Yeah. From a bit of your earlier answers, Doctor, I'm getting a picture that supply of equipment and leasing companies, it's important to have a good relationship. And explain to me, why is this the case?
Well, relationship in business, or to be specific, a good relationship in business is generally a good thing. In one end, it increases income and the profit for both parties. For example, if you talk of lessor will make more money, make more profit, the more and more lessee come to lease assets.
Of course.
And if a customer approach supplier for a purchase of equipment, will be required outright purchase price. If such customer cannot afford, the supplier will normally direct that customer to a leasing company which can acquire the same asset but using leasing arrangement. By doing so, both supplier and the lessor will actually increase their profit, will increase their sales.
Okay, thank you very much, Doctor. We've been talking for some time now, and I just want to come to you, Mr. Shefu. Please tell us, what items or what things should an entrepreneur be aware of before entering a lease contract?
One of the most important things that the entrepreneur must be aware, firstly, he has to be conversant with the business that he wants to perform. So, assuming an entrepreneur wants to run a dala business, so he has to be very conversant. How do you get licenses, the routes? He has to actually have prepared projections in terms of income streams and cash flows. How are the money going to come through? So those are very important factors because you need to know that you are able to actually pay. And certainly your lessor would actually want to see those information. Secondly, he has to be aware how the financial leasing operates. So again, financial leasing is a very innovative financial product. So he has to actually aware, for example, issues to do with terms and conditions in terms of it's an agreement, it requires discipline, way of operating it. Third, he has to acquire the equipment that he needs. So if it's a bus, he needs to acquire from the right supplier. The right supplier is actually a supplier who's authorized. So if you want to buy Scania, we all know that authorized supplier for Scania is a Scania. And so are other types of equipment, they are authorized suppliers. The advantage of buying from authorized suppliers is actually get a warranty from the supplier. If you buy from an authorized supplier, you may not get a warranty, and you probably have to. Second, also another important part which your considerations will actually mean that you need to buy the right equipment. So if you're looking for an equipment, say a printing machine, for example, and your capacity for your company is to print 1,000 pages of publications. So depending on your capacity, what do you want? Do you want to buy an equipment for 10,000 copies of publications or for 1 million copies of publications? So you need to buy the right equipment that is suitable for your use. Yeah. And thirdly, certainly you need to make sure you use that particular equipment at its optimal level. So if you buy a bus, 5 buses for Arusha Dar es Salaam route, you make sure they are all actually on the road because you need to make money, and the more they actually stay idle, you are failing to generate money to actually repay. You need to understand the cost involved. For example, just buying a bus is not adequate. There are other costs involved. You need to hire a driver, you need to pay insurance, you need to pay road licenses, and there may be local authority taxes that you need to pay, and fuel as well. You need to buy fuel, so that's not part and parcel of the lesser. Those are important factors that I would say. Thirdly, you need to read the agreement. You need to understand the agreements, terms and conditions, and be ready to actually comply with those terms and agreements. You may have to seek financial advice or legal advice to interpret what does it mean, what have you signed against, so that you're able to comply to that.
Thank you very much, Mr. Sheriff. Now, after saying all this, after discussing this issue in deep, what do you think are the benefits to the Tanzanian economy that will be brought through financial leasing? What benefits can you see through this finance product? The financial leasing actually brings a lot of benefits directly and indirectly to the economy. So first, if you think about entrepreneurships, the financial leasing actually enables stimulation of the economy. You'll have more entrepreneurs in the economy. We're talking about increased tax base, and hence public services will improve. We're talking about employment. So the more you have more entrepreneurs, more businesses, and employment level would actually go up. Not to say the increase in middle-level executives. Public service delivery, we see that the local authorities, they lack basic equipments like fire tenders, the fire engines, they lack garbage collection trucks, they lack road construction equipment, the graders. They are pretty few actually. And hence the financial leasing actually brings the opportunity to actually increase in those, and hence increase in public delivery in public goods. And there you have it, dear viewer at home. That has been a very informative and eye-opening special program on financial leasing. I personally, gentlemen, thank you very much, because you've opened my eyes to something that I think, being an entrepreneur at heart, I would jump into and use the opportunities at hand. Before we leave, I'd like to give each one of our panelists a chance to give us last words on financial leasing and what their closing remarks on this special program. So without wasting time, Dr. Lotto, please tell us something.
Financial leasing is a contractual agreement whose terms have to be clearly understood by the viewers before getting into it.
Okay, so you need to know your facts.
Yeah.
Thank you very much, Dr. Lotto. Coming to you, Professor Jairo.
Thank you, Danny. The government has enacted the law, so that has provided the legal framework to enforce the contract. And then the Bank of Tanzania has issued the regulations, and in that way creating a conducive environment, a level playing field for the lessor and the lessees. And therefore I take this opportunity to urge the banks and the financial institutions which would like to operate financial leasing to apply for the license from the Bank of Tanzania, and then to follow the guidelines or the regulations. And also the regulations provide protection for both the lessor and the lessees, and then all the parties can therefore take part into a leasing agreement.
Okay, so basically what I'm taking from you is that the legal framework is there to moderate the operational environment of financial leasing.
Yes.
Thank you very much. Coming to you, Dr. Mzava, what do you have to say?
What I would like to tell viewers is that lease financing is alternative form of financing, and it provides a convenient and relatively easier way to acquire assets. You don't need to pay the outright purchase price. So I urge entrepreneurs to go for it.
Thank you very much, Dr. Mzava. Jumping to Dr. Mohammed, last words.
Thank you very much. I would like to urge and encourage our viewers to take advantage of the lease opportunities that exist in the country. And this is particularly useful in terms of, as I said earlier, spreading of the cost of the equipment and the tax advantages as well.
All right, thank you very much, Dr. Mohammed. Last but not least, my consultant, Mr. Shefu, please give us your closing remarks.
Thank you. My comment is, if there is any entrepreneur with a good business case, also non-governmental organizations or religious organizations who thought that they could not actually own or possess productive equipment, they can actually possess now or own and productive equipment through financial leasing. It's pretty convenient, and they should actually go for that, and that will actually improve their business performance.
So key word from you, Mr. Shefu, convenience.
Convenience, and you can become more proactive, and you can actually own these equipments ultimately in a more convenient way.
Yes, thank you very much, Mr. Shefu. Dear viewer, we've come to the end of a special public awareness program on financial leasing. Remember this opportunity, and it's an emerging financial product in the Tanzanian finance market. So please, as you've heard everybody here, so please take advantage of what you've heard our panelists say here today, and jump into this bandwagon to change and improve productivity, or even realize the dream that you wanted. Just to remind you again before we close, this show was powered by the Bank of Tanzania to help you at home understand this issue. We've done for the day. We want to say goodbye here from the studio.